Good morning, traders. This is Chris Buss with Traders Profit Compass with a pre-market look for Friday, August 14th. Okay, starting out with the indexes. If you've been following along, we've been watching this 4-hour channel. Price has been walking up the low side. So for longs, I don't think there's any reason to, be overly concerned until price drops out of the channel and we start seeing closes, in the, the 326, 325 area. If we were to break down below, 319, 314 and take out all these prices and put in a lower low, then I think there's a good chance for at least an intermediate term trend reversal. But no reason to exit your positions now. Let's make price take us out of any longs that we may have in the works. So, not trying to front run any kind of anticipated change. We may end up still going higher. So sit tight in your longs. Watch the trend line in this trend channel. As long as we're inside, I think we're okay. So let's move on to the shorter time frames. This is the 30-minute chart of SPY for active traders. Yesterday we said that it would be an objective trade to fade this high. And you can see we had a lot of clues over the last couple days that this 338 was a problem. I mean, I counted these bars, 12 bars, 12 30-minute bars, not being able to punch through 338. So, it may have been a frustrating trade from the standpoint, if you were trying to short, say mid-morning, you were watching something that didn't move for 4 or 5 hours, and that can be frustrating. But it's not hurting you. You may have been bored, you may have been frustrated, but that was still the right trade. And if you had your stop just above, there was no reason to get out of the trade. And finally, it broke lower. Went down to support here at 336, and so it was good for $2, and that's a great trade for intraday. This would have been a logical place to cover. Hopefully you had that area pre-identified. We had talked about it in the notes from yesterday as being first support. So if you're going from point A to point B, a logical place to cover. So that was a good intraday trade. Now today, pretty much the same thing. We're in no man's land right here. Futures are red, so maybe we'll open closer to this 335.62. But as long as that holds, I think you can be long against it. Possibly get a move back up here towards 338. But if not, if we sink lower, we've got almost a $3 gap here below from 335.44 down to 332.80. And we can look for a gap fill there. So use this 335.62 as your pivot. You can stay long above and then short below. Moving on to the Qs, the 4-hour chart, pretty much the same thing, same ideas as on the SPY chart. We've had the rising channel. Every time price gets to the low side, the dipsters step in. We were watching for that right here. They stepped in again and pushed price up towards this 275 level. Although we do have these bearish divergences present, momentum fading while price is rising. They haven't meant much to this point, and it's not a reason to sell. It's just a factor to be aware of, a yellow flag, if you will. Really, the only time to get concerned for longs is if we drop below this channel and start getting closes in the, the 265, the 260 area. That would be, a warning shot that things are changing. So stick tight, stay long as we're in the channel, and then sit up a little taller if we break below. 30-minute chart. Yesterday we came back up to tag this 274.64 area, and like before, price didn't like that level and then pulled away. We had actually talked about fading this level as an objective trade. That worked. Maybe not as easy of a trade as the SPY, because we just had one or two tags of it. But until price can break above, traders keep doing what's working, and a fade worked over here, and so a fade worked here as well. You could have tried that with a stop just above, and that was good for, let's say 274.50 down to 271.50. That was good for $3, and that's a great intraday trade. So today, futures are a little soft. Let's use 271.50 as our pivot point. Long above for hopefully a push back up to 274.64. But if it breaks below, we're looking for 270. A break below 270 favors a move down here to either this 268 level or this 267.37 top of the gap level for a back test of that. So use that as your toggle point. Long above 271.50 and short below. And if the ball starts rolling downhill, you can either add at this point, or if you miss the entry here, you can enter on a break of 270 with a stop just above. And as you move down, you can move your stops down with it in case you get a kickback bounce that would, take you out. Just follow price all the way down, and maybe we'd end up getting this gap fill all the way down here at 265, and that would be obviously a great trade. Up here on the momentum indicators, we do have a bear cross, and we do have RSI trying to make a push below 50, so those would tend to favor lower prices if those were to move lower. IWM has not been as easy of a trade as SPY and QQQ. I thought on a break below this 157.50 that price would move faster. It found support here at this 165.50 level. I think if we get a break of that level plus a break of this rising trend line, that we're going to make a quick run down to 155. If 155 were to break, then we're going to come down to this 153 level. And I think it's interesting to note, this was the big value rotation, and now that rotation is fading. Even though interest rates were higher yesterday, the bank's KRE bank index was down 2%. Industrials were down. Energy was down. So that value rotation trade looks to be losing some steam. Now, if price were to rebound and take out 160, it would be back on again, of course. I think the IWM index is a real good proxy for that value trade. It's got a lot of banks, got a lot of domestic names with exposure to the real economy. When this index is going up, it is a good indication of that reflation or return to value trade. So key off of this 156.50. I think lower we see 155. If we can break back above 157.50, I think you can buy it and look for a move back to 160. Quick run through FAANG. Not a lot going on yesterday. Facebook is stuck in this range between 256 and 266. I think it's real tough to make a directional trade in here. I'd rather see you wait for an objective level here at 266.60 or down at 256 before you decided to make a directional bet. I think in here is no man's land. I think anything can happen. Amazon moved up to this 3,200 level. I think that's a perfect level to use as your pivot point. Above 3,200, I think 3,250 is in the cards. Below 3,200, I think it favors a move back to 3,150. Then, of course, if we move below there, then it's 3,100 and 3,050. But, any move above 3,250 and might get a much bigger move to the upside up towards 33.35. So we're smack dab in the middle, but we do have an objective level at 3,200 to trade against, either on the long side or the short side. Apple, we got this breakout to all-time highs above 465. That gives you a beautiful level to trade against. As long as you're above 465, you can play on the long side. But if price were to, of course, drop below, then I think it favors a move back to this 443. So you've got a very clear trading level here to shoot against, either on the long side or the short side. So that's a nice setup there if you like to trade Apple. Microsoft, over the last couple days, has traded pretty well to the technicals. We had the drop below 211. That favored a move to the bottom of the box, which we got. We had an overshoot. Came down here into the 204 area. Next day we finished low and then gapped up. We reclaimed this gap level at 205, made a big push to the top of the box, 211, and got rejected. So now, if you got short on this rejection, I think you can stay short and look for a move back down to 205. And, you'll have to kind of gauge it here. If you start seeing a move back up, you may want to just cover it and take some of your profits. Wait to recycle in back up towards 211. But, price has to prove it can break above here. And I think the odds are that it stays below. So I think the play here is to fade 211 with a stop just above. And if it takes you out, you can flip long and look for 215. But I think as it stands now, it favors lower prices. Google, we got the gap fill. Came right up to the top of the gap, 1538, tagged it twice, and came back down. So that 1505 and that 1538 proved to be really nice levels. Actually, even this level down here, 1480, proved to be a good level to shoot against after this tag here. Came back down, double checked it, moved up, moved into the gap, and then went ahead and filled it. So if you traded it and used these levels, it should have worked out pretty well for you. That was a pretty nice gap fill, and then a rejection, and back down the other way. So today, kind of in no man's land to start. If you didn't have a position, I would be looking to do something down here at 1505. Odds are that it holds. That's support. You could get long with a stop just below and look for a move back up to the top of the box. And of course, if price takes you out, then it's going to favor lower prices. Yesterday, we talked about XRT, the retail ETF that we've been long since 45.5. We've rolled up a couple times. We're currently sitting in September 50s that have risen in value. Yesterday, we noted some big players shooting against XRT with a lot of put buying. We do have retail sales coming out at 8:30, and we also have a lot of retailers reporting over the next 2 weeks. So what we did here was, or what I did was, I took half off, and on the other half I sold September 53 calls for $1.20. So I've got only 70 cents in this spread if they take it down today or in the weeks ahead. I've really limited my losses and booked a lot of gains on this. But as far as price goes, there's no reason to get out of the trade. Moving on to bonds. If you've been paying attention, bond yields have been rising, sending prices lower. Had some very well-defined levels here at 167.50 and then at 165. It has blown through those levels, and the next level of support is 162. So unless it can recover this 165 level quickly, I think it's going to favor moving down to this 162 level. Apologize about that phone call. I hope you heard what I said. 165 is your pivot. Above is bullish. Below, I think it's coming down here to this 162 level, where I would be a fairly motivated buyer, at least with a starter position. I think the bottom line here is 159. If it got down here at the bottom of the range, I think you'd have to really consider taking a long at the low end of the range, and then look for a move back up over time. Gold bounced yesterday, came right up to the gap at 184 and was rejected. I was squeezed out of my short, so I covered that at a small loss. I'm not planning for this gap to be filled. I think price is going to come down first. But hey, if it breaks above, I think you can get long and see if it runs back to fill that 190. I think that would be a great trade and a really high risk reward trade. If you got long at 184 with a stop just below, you've got $6 of upside potential on that gap fill. And, that's about as good as it gets as far as, risk reward. If you get stopped out and lose $1, that's trading. But if it breaks above and ends up filling that gap, that's a massive win. That's as much as these people made on the downside. So I mean, that's a good trade. Want to direct your attention to a couple of the ag commodities. Corn is making a move coming out of this divergent low down here. We didn't really catch the quote perfect entry, but here we are, just taking out the 50 with the 200 way up here at 1310. You can see the bullish divergences here on RSI and PPO. I think this has room to run up towards 13, and if it were to take out that level, we'd be looking 14, 15 if corn really gets going. Coffee had a big run off the low and has come back. Missed this entry yesterday, or on what would that have been? Wednesday, on this halfback entry. But as you can see, recent highs at 40, 41, 45. This thing can really go. I think if you got long here if you were willing to give it, a dollar's worth of leeway, I think there's a good chance that it can take out this 39 and make a run towards 41.50 and even 45.50 if everything broke our way. So I really like coffee here. It is optionable. Watch your spreads and use limit orders, but it has a fairly decent chain. So JO for a long trade on coffee. Another ETF in the ag space is this DBA, and it holds a whole basket of commodities. It's got wheat, corn, soybeans, cattle, hogs, all kind of ag commodities. It too is coming off a divergent low, a double bottom with bullish divergences in place. It broke out, came back, and now it looks like it's going to make a run towards this 1460. I think that's one you may want to keep an eye on, especially if it takes out the 200 and this resistance level at 1465. I think it can make a run up to 1650. When these ag commodities get going, they can really go. And the nice thing about it is it doesn't have anything to do with the stock market. So it is a diversification asset that you can have that's not linked directly to the stock market. And I think that may be a good thing in the fall to have something, a diversified asset to trade. So let's see how we wrap up the week. Futures are a little soggy, but we'll see how it closes out. I really appreciate you spending some time with me this morning. I hope you found it helpful. If you look over in the show notes, there's places to register for Traders Profit Compass to get all my content. Certainly check out the blog that has interesting information, helpful information for aspiring traders at all levels. And by all means, if you like the content, please give me a thumbs up and register to the channel. This has been Chris Buss with Traders Profit Compass. Thanks for the time, and have a good trading day, and talk to you soon.